My top five were and still are. The number one still remains the debt. It's still hard for me to say that we have $36 trillion in debt. When I started in the business, we never even used the word trillion. We didn't even know what a trillion really amounted to. But the second still remains the retirement and aging crisis. The third was the immigration invasion, and I think Trump will do a lot to stymie that. I don't think it should get worse during his time, and there could be somewhat of a reversal on that. But there's still a huge cost associated with it. The fourth still is the BRIC. This is just the quiet period now. They accomplished a lot what they wanted for 2024. And by spring, we'll start to hear what they plan on going forward in 2025. So I think that remains. But the political paralysis is still there. I mean, the hatred, there's no middle ground to the side that can't stand Trump. You can't say or do anything. They lie outright. They just make up stuff. And there has been a handful of people that have, I don't know if you want to call it, gave an olive branch, but maybe they won't be as bad. But as you know, and this is hard for a lot of people, I wrote about it this week and again, I think this comes from an evil that is spiritually led. And these people have embraced it and their souls have been taken over by it. So I suspect after this honeymoon period, and by the way, between Thanksgiving and New Year's, no matter who is president or who's about to be president, Wall Street at least, and people in general in investing, go into what I call the no bah humbug period. Meaning I don't want to hear anything negative. I don't want to hear anything bad. I want to, for 1 month at least of the year, say hello to my fellow Americans, not argue with everybody. I'll worry about that in the new year. So you usually don't get a lot of big concerns expressed during that period. And I think that'll last through his inauguration. But soon after that, he will have to hit the ground running, Elijah, because he doesn't have 4 years. He only really has 2. And the reason I say that is we have congressional elections again 2 years from now. They almost always flip a little from what they did beforehand. And we have a lot of Senate seats that are going to be up, and more Republican-held Senate seats will be up. And those guys, if he doesn't hit the ground running and he starts to have issues, they may not stand behind him as much because they'll worry about their own reelection. But I certainly think there's a period of time now that we can say at least one of those top 5 has been put in check. I really think he is going to go full blast with the immigration. Hey, look, even up to the north of the border where it's just horrific what's happened there, Canada's suffering much more from their immigration invasion. Even their so-called leader right now has said that he's going to put a freeze on immigration. Too little, too late. But I think it's going to turn. It's turning in Europe. People realizing you just can't have this overwhelming number of people coming in. And then the cost to those that are already here is just astronomical. Yeah, so right at the height of the BRIC meeting, I decided, I've been long gold since 1300, that we were going to have a sharp but fairly swift and not long-lasting correction. And I used it to take some profits. Thankfully, last Friday, I expressed that I thought the bulk of the correction was over and that, we can go back up. But what I do want to point out to people, we went up 40% in gold in a year, from the beginning of the year to the height. This is not Bitcoin. Bitcoin is just a high-flying speculation. They can call it whatever they want. They claim it's going to be a reserve currency and all. Gold is a monetary force. It doesn't normally, nor is it really good for it to go up 40, 50% every year like that. So it was quite healthy. And for anyone like me who still believes we're going to be north of 3,000 before it's all said and done, and could be possibly a lot more than that, we needed this correction. It was basically a semi-parabolic move up. And quite frankly, the two things that were leading it up, the BRICS happened. So, this buy the rumor, sell the news. And also the central bank buy-in eased a little, not to where it's changed, of course. And then, of course, the Trump win initially, people view it was even more negative because the dollar rallied. He's going to be a Bitcoiner. He's not going to be a gold supporter. But gold, again, as you and I speak today, up nicely. I think it's up also because, can I just stop and tell you, the complacency in my 40 plus years, both by professionals as well as individual investors, is off the charts compared to the fundamentals out there. When today, we're probably the closest to a nuclear crisis since the Cuban Missile Crisis in the early 60s with Kennedy. And you would never know that if you were listening or the talking heads on Wall Street or the average investors. But this is a real big concern. And look, you don't want to root for it, your gold, because it's going to wipe out even if you own gold. But it's really alarming that people have pushed something like that aside at a time when really those type of things should be even less handled by this current administration because you're a lame duck, and basically put any of those decisions. Listen, if we haven't allowed Ukraine to shoot these missiles by now, and it's November 19th, what's 2 more months? Let the new presidency come in and let them handle it, so to speak. And some are arguing, I think it's a good argument, that this is a way of creating more problems for Trump than trying to help things get better. He's the least of the warmongers that I've seen as president since I've been an adult. There's no question that even the overtures out of Putin was that, he's prepared to talk to Trump, and he's prepared. And of course, the other side says, because he's in his pocket and all that. No, the man has not wanted to go and be the world's policeman. Even when his famous meeting with the NATO leader, when he said to him, we're paying 4 or 5 times more to protect you, and at the same time, you want us to pay to protect you from Russia, and you're buying all their gas. How does that make any sense at all? So I think we have a much better chance with Trump in the White House not to have World War III than we do with a man who just continues now. When you watch him, I don't even know if he has the capabilities to understand what his generals and all could be saying to him right now. And the other person is just what we all saw with Chilak. So it's really concerning between now and January 20th. I think the market has been up, and like I said, it gets a benefit from Thanksgiving to New Year's, that people kind of look at the cup half full no matter what until the new year, and then of course they go back to being themselves. There's 2 things I think that have kept it going. One is all the excitement in the Bitcoin. Now everybody's excited. Bitcoin's 92,000, had peaked at 70 something. It's not a huge move given where it was just a couple years ago, but everybody and his mother says it's the next best thing. There's hard to find anything negative about it. I keep saying it won't peak until they announce it cures cancer. Then, of course, we'll know that we've reached the ultimate peak. But I think the thing to be concerned about, whether you're a bull or a bear, is what happens with interest rates here, especially coming into another period where the Fed is expected to cut interest rates again. 10-year Treasury bond has actually increased almost by a full point from before the first cut in interest rates. And it's up in an area which I keep targeting, and we got right up to it again, the 450 yield area. And if we get much above that, I do think it's going to cause a huge problem no matter what period of time of the year is for the stock market. For one, for those that still treat stocks as stocks and bonds and not one big casino, there is some valuation models now that suggest for the first time in a couple of decades, bonds are actually getting more attractive than stocks, pairing one to the other. I also think that we're going to continue to see Trump, no matter what other things he may do well, be as big as a spender, if not more, and increase the debt up tremendously. And I think that's concerning, that the Stanley Druckenmillers, the Paul Tudor Jones, and some of the smartest people who I'd give my money to tomorrow if they would manage for me, and that is they are going negative on the bond market. They're becoming what a word that I haven't heard since I first entered the business in the early 80s, bond vigilantes. And there's a great concern about the talk that's been around for decades in the gold market, but it's finally come to the bond market, and that is the ability for this country to pay off its interest. We're heading to 50 trillion. The Congressional Budget Office says we're going there in less than 10 years. A 5% interest rate, 2.5 trillion in interest expense. Best year we ever had was 2022 in revenue. It's a little about right on the 5 trillion mark. We can't sustain the government as we know it, no matter how many cuts and excess waste that they get rid of, which I think is going to be a challenge for them, by the way. But nevertheless, we won't be able to pay half of our income to interest and still have a government that we've grown accustomed to and all. So I think the stock market pretty well was in a mini melt up right up through the election and for a few days, but it's given most of it back. And like I said, if it wasn't for the seasonality of having positive, I'd even look to short it. But I just know that I too will not be bah humbug until after the 1st of January. First of all, we just learned today that 40% of car loans in existence are underwater, which simply means that people owe more on the car than the car is worth. So those aren't going to be any new car purchases anytime soon. That's the reason because someone went out as far as 8 years in car loans. The second is we've seen it tremendously hurting continuously in the real estate market and in homes. Mortgages have popped back up. It's becoming increasingly, if not all-time difficult for new buyers to buy. And we're also seeing that, and let's not forget, we still have all these banks who have bought all those papers, the credit paper and bonds and stuff at the lows of interest rates, and they still have all these unrealized losses on their books. And of course, it impacts the working class person. The bottom 50% of wage earners, or 1 out of 2 of Americans, half of them, or 25% of all workers, are using credit cards to just pay necessities. Gas, rent, food. That credit card is the biggest monkey in the back. It's worse than borrowing money from the mob, because once you start making just those minimum payments, you never get out. And these are all serious issues, and they'll come to bear sooner than most people think. Maybe not in the next few weeks, because it's not something people will focus on. But there's a lot of structurally things wrong that have been done for decades and from both sides of the aisle. And as much as I think Trump and some people who are behind them have pretty well average good intentions to try to fix these things, some of these things are beyond fixing. And I think the realization that may not come to the latter part of next year, when they see that a lot of those things don't get done. And it's sad to say, but it's your business, that actually still bodes well for the metals. That's why I don't have any real concerns about anything structurally wrong with the gold market. I know the BRICS are going to move more forward. I know that central banks recognize the change is coming, and that's why they've accumulated all this gold. And so the gold market is a much safer place for fears of loss of large principal. It may not make as much as some people predicted at all, but I don't think it has a 40 or 50% downside. I do think if some things go wrong, the stock market had that. And I think that's the other supporting mechanism now for gold. And against bonds, people are feeling gold is a place for safety of principal, something that you've spoken about, and I'm sure your dad was speaking about when you were a little boy. And it's true, and it finally come to bear. The things that were spoken about for 10 or 20 years that people kept hearing, maybe to the point they were nauseous. But now those things are playing out right in front of our eyes.